Hi all, this is Ashish Kyal here. Welcome again to Elliott News channel by Wave Strategy Advisors. And we can clearly see, today in today's agenda, we are going to discuss about what is the Nifty pattern which is currently ongoing after a few days of sell-off that we have seen in Nifty and even the high beta sectors like mid-cap and small-cap stocks. There were very serious capitulation that was seen in just 4 to 5 days of time, and then a V-shaped recovery from there. So we'll be discussing about what can be the probable Elliott wave pattern and what are the chances of resistance on the upside, what can be the levels which one has to watch on the upside from here on, and what can be the trading strategy. So let me now very quickly start. Let me share across my screen that shows the chart of Nifty. So if you can see here, this is the Nifty chart where you can see the entire move on the upside from the lows of 7,900 onwards, and how the price have been moving. And we can clearly see that there is some kind of a shift in terms of the channel that I have drawn. So you can see the first blue channel, the steepness of the rise, the black channel, and the red channel. This red channel we have been discussing about for quite some time. So this is one of the important channels that one has to work on. So any technical analysis study that you do, you need to understand the channel, which channel prices are respecting. Now also there is one more way of drawing it. This is another one. If I connect yesterday's low and I draw a parallel to this line of yesterday's low, I get another channel, and as per this channel also the resistance is very close around to the zone of 9,600, 9,620 on the upside. So both of these channels are working extremely well, and this red one, the thick red one and the lighter red one, both the channels are working extremely well. So the first thing a chartist should do is to draw a channel on the chart, because that will help us to understand what are the probable reversal areas that one can identify using channels. And this is the most basic and important technique that works in the market across the time frames. This is a 60-minute chart, but you can apply this technique even on an on a daily chart or a 10-minute chart or an annual chart. So this is something that has to be applied across through and through. Okay. After this is done, what one has to do is to try and identify if there is a pattern under formation. Looking at the overall movement from the yesterday's low. So let me zoom in the chart. So movement from this low, if one sees the rise has been pretty sharp and fast without any sufficient base formation that happened here. So this move on the upside has been very sharp and fast, which looks like to be the start of another pattern on the upside. So because of this rise, if it would have been an ongoing diametric or an extracting triangle pattern like expected earlier, the rise wouldn't have been that steep, because during the final stages of a move, we should start seeing divergence. We should start seeing some kind of a slowdown in the move. But what happened? The divergence was there, and after that, the correction happened for a few days. And this correction resulted into mid-cap and small-cap stocks capitulating severely. In fact, the mid-cap and small-cap indices corrected nearly 6 to 8% in just a small span of time. So that clearly shows that the correction was sharp and steep, even if it was not on index. And it is because of that the correction probably got over in the stocks that were supposed to correct, and then we started seeing another leg on the upside. To fit it in the entire bigger degree up move, the entire rise from the lows looks like to be a diametric in the first W, which is marked here. So this was entire diametric pattern. The sideways action, which probably completed wave X here. Then the second set of correction on the upside got completed here again in the form of internal diametric. The internal counts will be shown in the daily research report, financial waves short-term update, which we publish for the clients. So you will be able to see the internal counts A, B, C, D, E, F, G, even in this in the daily research report. Post the completion of the up move over here, prices corrected on the downside, probably another wave X. So we completed two standard corrections on the upside, and another wave X got completed here, and the next trend has started on the upside. Now this next trend can be in the form of a triangle. The reason being, normally in case of a complex correction involving two different X waves and the third pattern starting, the third pattern ideally should form a triangle. And also when we see a huge violency in the first leg itself, the chances of triangle formation is high. Nevertheless, there is the other probability scenarios are also going to be open for now. What is going to be important is to see the retracement which comes in the form of wave B from here. So the wave B retracement, whenever it starts, is going to provide us very, very vital information on how much deeper the correction is going to be, and post the B, how much C is going to travel. So C is going to provide a good opportunity for creating the long positions. If someone asks me to create long positions at the current levels, I would say no, we can't do that, because at the current levels, there is already it's already near the channel resistance, and if it is at the channel resistance, there is no risk reward, there is no stop loss in place in this entire up move. If you look, there is no stop loss in place, so you can't do that. The risk reward is not favorable. So looking at this, we are probably in wave A. Post the completion of wave A, follow the channel, we should see wave B, and after wave B, we will be getting opportunity to again go long in the form of wave C. Till where this rally is going to go, it's difficult to judge as of now, but as per the channel 9620 looks like an important resistance on upside. However, keep in mind this channel is shifting on the upward side, so we will have to keep revising the upward target accordingly. Also, the stocks that corrected severely like SBI, Axis Bank, and ADAG Group or RCAP, so these stocks have not shown very sharp momentum. So the buying is emerging from some other stocks, and in fact, IT has been contributing a lot to this time. So there is a possibility IT has probably formed a very important low in the current market. So in a nutshell, the overall trend for Nifty has probably now again reversed back from the lows to the positive side. Nevertheless, if someone wants to create a long position, this is not the zone, because it is now approaching near the channel resistance. And from here, it is prudent that after the completion of wave A, once wave B starts, it is better to see how deep the wave B goes, retracing this wave A. And then one can ride wave C on the upside, creating the long position, skipping low of wave B as the stop loss. So that is the ideal strategy one should follow. We will be publishing the internals of this ongoing pattern and the counts in our daily research report. So that's it from my side. The overall trading strategy should be with you on the Monday morning. And stay tuned. Have a wonderful weekend, and see you again next week, 4 p.m. on Friday. The repetition of this telecast can be found on our website by 5. You can visit wavestrategy.com and visit the Elliott Wave channel. And for any queries or doubts, you can write to us at helpdesk@wavestrategy.com or call us on 999204 for any doubts, feedback. You can also plot your charts from the website, and you can also participate in the ongoing discussions which is there at wavestrategy.com. Thank you very much. See you again next week.